You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
All right, welcome back to Insurance Matchmaking. If you listened to the show last week, you heard me talking about Medicare approved and non-covered, and Medicare non-approved or non-covered expenses. And again, a lot of times those expenses can be non-medical, but they are related. Maybe a health condition you encounter, whether it's an illness or an injury. One of the things sometimes I don't want to say I want to say we, but we're able to offer at Matt Libby Insurance. We have, short-term disability plans, and a lot of times you can get some of those things through your employer. Maybe there's a payroll deduction plan, but then again, sometimes it's not. Or maybe you're self-employed, or you're working somewhere as a 1099 contractor, so you can't get on any of the benefits that may be offered at that place that you're working. But so you can get other plans that help pay you while you're out of work. So we're going to talk about what a lot of times referred to as ancillary plans, supplemental plans, indemnity plans. I know that one throws a lot of people in. I'm not even sure where the word comes from, but the easiest way to explain, if it says it's an indemnity plan, it means the insurance plan is going to pay you. It's not like your health insurance where you take your card in the dentist, or the doctor, or the dentist with a dental plan will take your card and they'll bill you. Now, speaking of dental plans, just a reminder, all the plans that we offer as dental plans, as standalone dental plans, are PPOs. You can go to any dentist you want, but a lot of times the dentist may say, we don't take that. And sometimes they mean they'll take it, or you'll have a dentist say, yes, we take it. And then you find out, yeah, they take it, but they're still going to charge you an arm and a leg for the procedure you're having done because they're actually not in network with the plan. So if they're in network with the plan, now they're limited to what they can charge for certain procedures. And again, most dental plans aren't going to cover 100%. Usually will cover 100% of your cleaning, but they can range from 10% to 80% of how much they'll cover for that dental procedure. So you have to be very well aware of what's covered. A lot of the dental plans, especially you get a plan, as we call them, standalone dental plans. They are a separate plan. They're not included with your health plan. And actually, if you have health insurance through your employer plan, you still generally have a standalone dental plan. It may be the same company, and I'll use Blue Cross as an example because pretty much most plans are Blue Cross, so I don't think I'm stepping on toes here. But you may have Blue Cross Health, and you got Blue Cross Dental, and you have Blue Cross Vision. But those are separate policies. They're not just one policy, because a lot of people will take the medical plan and not. They don't wear glasses and they have dentures, so they don't take the dental insurance, or they just, or they'd rather just pay as they go, or maybe they have a dentist who doesn't take insurance at all. So there are reasons people don't take those plans, but those are separate plans. But they're usually going to have some waiting periods. Most plans are not going to have any waiting period to get your exam or get your teeth cleaned, and most of those plans usually will cover 100% of that cost. I do have a plan that does have a deductible that you have to meet even with the preventive, so that probably covered that another show, but that's a conversation for later. And then they'll usually pay so much of a percentage for your routine dental work, getting a filling, touching up a chipped tooth, something like that might be considered minor care. If you have to have what they call the quadrant planing, because what it is you haven't had, and I've had this happen to me, so I'm speaking from experience, is maybe you didn't get to the dentist for a year or two and didn't get a good cleaning every 6 months. So you've had a big time plaque build up on your gum line and below your gum line, and maybe even some, gingivitis. You've got some infection going on in your gums. To fix that, they have to do what they call quadrant planing, and they have to get below your gum line and get that plaque off your teeth so your gums will heal. Well, that's more than just a routine 30-minute dental hygienist. I mean, the dental hygienist is probably the one still doing it, but it's a more drawn-out process, plus the time it takes, and your mouth's going to be sore after you get done, so they'll only do 1/4 of your jaw, or 1/4, half of one jaw, 1/4 of the teeth in your mouth, and they'll schedule another appointment that may be, a couple days later or a week later. And those are more in depth, and those are generally going to be considered major. So a lot of your standalone dental plans are not going to cover anything major, or they're going to cover very little of it. Maybe 10 or 20% is all they'll pay in that first year, and then after 12 months, they'll pay, say, 50% or 60%. It varies from plan to plan. And then you have an annual benefit that they'll cover. So they'll pay, $1,000 in the year, and once that $1,000 is used up, any other charges you have are out of pocket. There are plans that have $5,000 and $10,000, and there's a few plans out there, one of them that I represent, that there is no maximum out of pocket. One of the other things I like about that plan with no maximum out of pocket, there's also no deductibles. So, and there's no waiting period to get your teeth cleaned. There is a waiting period for those major things, though. So but you can go all the way up to 70% for your care on that plan. There's 4 levels, and the top one is 70%. So we'll pay 70% of any dental work you have done, but you do have that 12-month waiting period. So if you're looking at dental, and again, you can go to any dentist you want, it's going to cover. Now, if you have a Medicare Advantage plan, if it's a PPO, you're generally fine. You can go to any dentist, and it's going to work like a standalone dental plan. But some of them are on HMO health plans, and the dental plan ends up being a HMO also. So then you have to make sure the dentist is in network with that plan. So a lot of times the dentists say, yeah, we'll take it, or ask them, if you say, well, we don't take it, you can clarify with them will you submit the charges to my dental plan? And a lot of them will. But they're going to charge you. There's going to be a balance to pay. So it's a little confusion sometimes when they say we don't take it. They just mean they're not in network with it. It doesn't mean they won't. It'll work. You still give them your card, and they bill the insurance company, and you pay the difference. That can also be done on some of the health plans. We offer. When I say health plans, I'm not talking about the major medical. I'm talking about some of those health-related ancillary plans, those fixed benefit plans that will pay so much for a doctor visit. They'll pay so much for an X-ray. They'll pay for a surgery, a hospitalization. Some of those plans will issue you a card, and you can go to a doctor's office and give them the card, and they'll handle billing with them. The other thing is the beauty. I think I talked about it last week some. Is you do have you can go in and negotiate a cash payment in. You can always arm yourself with things. If you know you got it like a surgery coming up or a procedure, you can go online, Google, and Chat GPT. Now a lot of people aren't Gemini using the AIs instead of Google or DuckDuckGo. I'm trying not to pigeonhole it into one search, but you can do a search and find out what's the cost for this procedure, or what is the Medicare schedule for it. So a lot of times you can just negotiate, hey, I know the Medicare schedule for this procedure is this, but you want to charge, is $200, and you want to charge me $500. I think I should only have to pay $200, or maybe even less since I'm paying cash. And then you pay that bill, and then you take that bill and you submit it to your indemnity plan, and they'll refund it to you. So you can negotiate those cash prices and get your health care bill much lower. Again, if you have an emergency, you're in a car wreck, you have something, somebody had to call an ambulance to get you to the hospital, you're not having time to negotiate right then, but you still have time to negotiate when you get the bill and say, well, no, I don't have major medical insurance, but I have this that helps me pay. You can maybe get them, and sometimes there's discounts involved with those plans too. That I'm saying discounts, that there is negotiated discounts through certain provider groups with those plans. So sometimes it does make sense to use that, but they are indemnity plans. Same thing with the dental, where they submit it for you, is you are assigning your benefits to that provider versus paying them first and then getting reimbursed. So it can work either way. We run into a lot, like I said, I talk mostly Medicare, but I do, I was talking about yesterday, I preach health insurance So, your sermon today in trying to influence the younger generation, and I've used the phrase, when you're in your 20s, you're 10 foot, you act like you think you're 10 foot tall and bulletproof, but people get sick every day, people get hurt every day, car wrecks, find out, all of a sudden you find out you have cancer. So there's a lot of those things that will come up that maybe you weren't quite ready for. But the problem is it's too late to get the insurance once you find out you're sick or after you get hurt. So it really makes sense, and it costs so much less if you get some of these plans in place when you're young, especially if you're in your 20s. So, and I'm going to talk, basically I think I'll talk about it after the break, the recovery care plan, but I'll just, talk about for younger people, you maybe have an ACA plan, or maybe you have an employer plan. But even then, usually those plans, you're going to have some high deductibles. And the other problem is if you're on an employer plan, and yes, you have health insurance, but something happens, you can't go to work for a couple weeks or a couple months. You don't have a paycheck coming in. You didn't have enough vacation to cover that. Or a family member had something happen. That's where these plans can come in to help a lot. And it doesn't have to be a disability plan. It could just be, a hospitalization plan that will reimburse. It basically covers the hospital costs, or pay so much per day you're in the hospital. And I say reimburse, maybe your insurance did cover it. You didn't have to meet the deductible, or you'd already met the deductible, but you still have several days of hospital costs, and you've got this plan that's covering so much per day that you're in the hospital. Well, now you've got that money, and so you're replacing your income with the money that's coming from, because it's reimbursing because you're in the hospital, or reimbursed for the ambulance. And I've used the example on here before when I busted my knee 4 years ago, and I spent the night in the hospital, and the only reason I spent the night in the hospital was I broke my knee on Saturday, and I had to stay in the hospital and wait for the surgeon to be able to fix my knee on Sunday. And I went home Sunday night. But I did spend 24 hours in the hospital, so I did get a reimbursement for the hospital confinement. And I keep meaning to go back and see, if I negotiated down, the charges, what was the EOB. So, one of these days I'll have those numbers. But I remember seeing the bill, and the bill said $28,000. So that included I guess it didn't include the ambulance. That was a separate charge. But the charges at the hospital, the surgery, everything that added up in the hospital was like $28,000. Well, my bill for that ended up being $1,000, $1,200, somewhere in there. I filed my insurance claims for that, help reimburse for the ambulance, surgery, for being in the hospital, the follow-up appointment with the orthopedic surgeon afterwards. I got reimbursed for most of those things. I didn't have any money out of pocket. When you work as self-employed and you earn your income based on if you're working and you're writing policies, I didn't work a lot for that month after getting hurt. And so I wasn't making what I could have been making. So I was kind of losing some money. Fortunately, I wasn't in that situation of I was looking for an hourly paycheck. Again, beauty of being in this business, I have renewal income, so I do get paid every month from sales I've made 10 years ago. So I had money coming in, but I wasn't making anything new. And so that's why I stress this with young people, even if you're on an ACA plan, is you have those high deductibles, or even if your deductible is not that high, if you're hurt and not working, you're not bringing any money in. So this can help recover those costs. So looks like I'm up on the break here, and I will so after the break, kind of address things again back to how things work with Medicare coverage.
Hi, this is Marvin Long, your local business solutions consultant. At Twin Lakes, we believe strong communities start with strong connections. For 75 years, we've been proud to serve this region, and today that commitment continues with our 100% fiber network. With gig speed fiber and local 24/7 support, we're here to keep your business running smoothly. Let's talk about how Twin Lakes can power your success. Learn more by calling 931-476-2151 or visit twinlakes.net.
Dreams are built one home at a time, and you can help make them real. Join Upper Cumberland Habitat for Humanity for the Putnam County Dream Builders Luncheon, March 24th at Live Church in Cookeville. Social hour starts at 11:30, lunch at noon. Tickets are just $25. Or become a table host for $400 and make an even bigger impact. Join the Dream Builders Luncheon and support affordable housing in our community. Reserve your seat now at uchabitat.org.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, we're back on Insurance Matchmaking. Before the break, I was talking about how the ancillary or indemnity plans come in handy for those that are still working age, under 65. Maybe you have either an employer plan or an ACA health plan with some high deductibles. Help fill some of those gaps. Kind of go back to, kind of my bread and butter is the gaps when it comes to Medicare plans. And we talk about we use the term Medigap. Known as the Medicare supplement plans. Those are those plans that fill some of those gaps of Medicare. Some of those gaps are Part A does have a deductible. I think it's kind of funny. I should know the number. It's $1,726 or $1,736 this year if you're admitted in the hospital. So if all you have is just Medicare, you're going to have that deductible. So and that's not too big a deal but you could have that charged several times during the year. It covers you. You're covered for 60 days. So if you're in the hospital and you get out and a couple of days later you're back in the hospital, you're not going to have to pay the deductible again. But if you're in the hospital for a couple of days and then 2 months later you're in the hospital again, well, now you're looking, because it's been over 60 days, you're looking at that deductible again. So that's one of the gaps. Then you have the Part B. You have the Part B deductible. That's kind of considered a gap. But the big gap there is after you pay that Part B deductible, because that's all your other health care, you're going to pay 20% of the cost. $100 doctor bill, $20, not a big deal. $1,000 bill for whatever, for a procedure, a MRI, something, and I'm just using that as an example. Okay, you got to pay $200. Again, little bit more, but not a real big deal. $200,000 cancer treatment. Now you're looking at $40,000. That's a big deal. So we definitely want to fill those gaps, and so the Medigap plans will cover that, but a lot of things they don't cover. Again, if you go with a Medigap plan to cover those Medicare gaps, and that the no coverage to max out of pocket, the 20% coinsurance, the Part A deductible, those come in handy. But hey, all the stuff you see advertised, the dental, vision, and hearing benefits on Medicare Advantage plans, which that could change too. Those aren't guaranteed to always be there. A lot of plans that they're having to adjust their costs because they're having to pay so much more on the drug coverage because of the Inflation Reduction Act. They're taking away some of those extra benefits that you got with a Advantage plan. So you might have dental coverage on your Advantage plan now, and next year not have it. So but if you have a Medigap plan, they don't cover dental. They don't cover vision. And when I say vision, I'm talking about like the eyewear. I mentioned last week on my show about that. I just had my checkup at the eye doctor. Well, because I'm a type 2 diabetic, I have to do that every year, but that's a medical procedure there. So that's covered by my medical insurance. But to get the prescription to get new glasses, that's a different part of and that when we say vision insurance, that's what we're talking about. The doctor gives you a prescription to get glasses or contacts, and then you pay for your glasses or contacts, and you get allowances for that. That's what a vision plan covers. If you have something wrong with your eye, you have to have cataract surgery. You have to get those shots in the back of the eye, which are really expensive. That's covered under medical coverage, but you still may have a lot of out-of-pocket costs with those, depending on what kind of plan you have. So that's where some of the ancillary plans will come in there. But if you want dental coverage and you have a Medigap plan, you're going to need a dental, vision, and hearing plan. We talk a lot about cancer plans. Elijah's probably and he may come on the show to talk about it. He's really interested in a plan. I'm not going to get the company name, but it's a little different than most of the cancer plans we talk about. It does have like that lump sum that'll pay out if you're diagnosed with cancer, but it also does genome sequencing. They look at your DNA and they'll contact your oncologist and say, we've done this check, and this is treatment plan we recommend that you pursue for this patient. And they have a very high success rate. So that's going to be a passionate thing for Elijah wants to cover. So I don't want to talk too much about that today, but I've talked about cancer plans, a lot. I've talked about the hospital indemnity plans. I kind of want to talk about that I mentioned last week. I want to talk about this recovery care plan, and so I'll go a little bit more in detail on that. But one of the things we talk about ancillary, you kind of use the term, we want to say it's essential. It's necessary. It's not just, I think I'll add that. You're going to have expenses. A lot of people, I've got retirement funds, or I've got my 401k. Yes, but a lot of those plans, you cash that extra out of your 401k. Now you're taxed on that money. And one of the things we've talked about, especially with Medicare, is our friend IRMAA. And I say our friend IRMAA because IRMAA is not a person, and it's actually not a lady's name. It stands for Income-Related Monthly Adjustment Amount. If you take money out of your retirement funds to pay for some health care bills, that might spike your income, and then it comes back on your taxes that, you're in this other tax bracket. You should be paying more for your Part B premium. So we want to, if we're not have to do the IRMAA, we want to avoid that. And that's one of the things too what I talk about. There are plans, the name just left me. Annuity plans, and life insurance plans that you can have asset-based long-term care coverage. And so when you take the money out of those plans to cover medical expenses, they're set up that basically you kind of need a medical claim. You have to submit paperwork to prove you had the medical expenses to draw that money out. Well, so that then you don't get 1099, that it was just a taxable withdrawal from your plan. So there are ways to protect your income. And the reason I bring that up is, yes, we have these plans that will pay for, reimburse or pay for your certain healthcare issues that aren't covered by Medicare, or in addition to your Medicare costs, and you're not drawing it out of your retirement funds, and you're doing it, for very low, relatively low cost. So a lot of times, people look at like long-term care. Then we also have, we call them short-term care plans because they're 360 or they're 1 year or 360 days of coverage. And the reason I stress on that 360 days, the 360 days, one, like I say, it's not a year, but it's also not necessarily less than a year. Yes, a year is 365 days, but some of the plans, it's 360 days of claim. So maybe you're getting extra care 3 days a week. You're not going to use up that 360 days in 1 year. So those are some things there that come into play. And I did a quick quoting this morning for this recovery care plan. I'm not going to use the company name, but if you want to get with me and find out what plan it is, we can quote it. And they're not the only company that does plans like this. So, but just kind of give you an idea. So what I did is I set this quote up. I did it for a 65-year-old male non-smoker, or I say 65. I did it at 64. This person would be turning 65 in June, because a lot of times that's when we get the opportunity to quote these plans for folks, is because we're coupling it with their Medicare coverage, and it will cover. So I quote it for you when you're 64. Because once you have that 65th birthday, it will cost more. So a lot of times, I'll quote these plans, work very close to when your Medicare starts. So a lot of times, we're quoting it to start the first of the month that you start Medicare. Well, Medicare purposes you're 65 on the first day of the month of your birth month. But a lot of other insurance, you're still 64. So we quote these plans at 64, but starting them on the month that you are going on Medicare. And I don't like to do that if we're looking at this, say we're looking at this 6 months before you're going to go on Medicare. Maybe we need to go ahead and put it in place here soon, this month, next week, whatever, because, again, these plans are going to have some underwriting requirements. Some of them are very easy underwriting, but again, the problem is if you now have an incident that would be considered a claim on the policy, you can't get the policy then. So you may not want to wait until you're on your Medicare to get the plan. But so I there's a lot of, the average annual cost of a semi-private room at a skilled nursing facility is $115,000 a year. So if you have $150,000 or $250,000 in your retirement funds, do you want it to be gone in a year? The average cost of living in assisted living facility, $76,000 a year. So that's where some of this recovery care type plans can come in. If you're in a nursing facility, Medicare is going to pay for the first 20 days. One of the things we do with this plan on recovery care is we'll eliminate that first 100 days. And again, depending on, because Medicare is going to pay for 20 days. If you have a Medicare supplement or a Medigap, your Medigap is going to pay days 21 through 100. If you have a Medicare Advantage plan, you're going to have a $200-some copay for those days up to days 100. And then after that, days 100, you're looking at generally like $400 a day or more. Of course, that's kind of today's dollars. If we're looking at for 20 years from now, we may want to plug in a little bit extra. But assisted living, Medicare doesn't pay for anything. There is a daily nursing facility coverage on this. Maybe you're in home. Now, Medicare will pay for eligible home care services, but that's health care, and that would be skilled nurse, and it's not going to be 24 hours of care. So you can get optional home care with this plan. So there's just other little thing. Medicare Part B excess charges. There's a prescription drug writer that will reimburse $10 for a generic prescription or $25 for a brand name prescription. Of course, you're paying that $2,000 max. Now, this will cover up to $300 a year, but that can go along. That can kind of help you cushion that deductible on that Part B deductible. Anyway, I'm getting close to running out of time here, so I kind of want to go over the sample quote I did for the 64-year-old. The total cost is going to be $239.46 a month. So if you've ever priced long-term care insurance, this is a lot less. So if you're waiting till you're in your 60s to get some care, this is going to be up there. But $400 per day for the short-term care, but the elimination period of 360 days, and then short-term care was 100 days, and then the prescription. And like I said, I'm running out of time. But just the short-term care indemnity was $119. So, we can a la carte this and put it into your budget. But unfortunately, like I said, I'm running out of time. So I got a lot to go back over and maybe bring this up and go a little more in depth on a later show. But always remember, stay tuned to Grace 107.7 and listen to Insurance Matchmaking Saturdays at 10. And remember, at Matt Libby at Insurance, we can cover you head to toe. It doesn't have to cost you an arm and a leg. And we will talk again next week on Insurance Matchmaking.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.